Investor warning, the coronavirus is being covered up. Your stock portfolio is at risk of a huge loss in 2020. I have to be careful what I say here for fear of China is shut down. Confirmed cases are still growing rapidly. Economies will slow. This makes money go to U.S. treasuries and places incredible pressure on stocks. If you own stocks and this virus keeps growing like it has, your portfolio is in immediate grave danger. In this video, I'll show you how to protect your money. I already have tens of millions of dollars following my strategy. Due to the emergency nature of this crisis, I'm doing something my competitors will hate. If you subscribe to this channel and click the notification bell, you'll get my full $1,000 per year advisory absolutely free. There's no time to wine and dine you and get you to pay a subscription fee for this information. By then, it will be too late and you'll already be facing massive losses when you could be making safe profits. Here's what I endorse investors do right now as of February 1st, 2020. Now, this is a legal disclaimer. Trading is risky. You can lose your entire investment. I'm not a financial advisor. You should consult your financial advisor and read the full disclaimer at portfoliobuilder.io/disclaimer. Here's my recommendation. Number one, for every $1,000 risked in the stock market, you should also have $1,000 of the TLT ETF. That's the U.S. 30-year Treasury. Big picture is you want to own the TLT until the federal fund rate hits 0. Currently, it's at 1.5 to 1.75% range. It has some room to go. Every time stocks crash, the TLT flies higher as investors anticipate central banks cutting rates to save the economy. This allows you to bravely buy and hold stocks and have very little drawdown during panics. That means you can hold your stock position in case this current crisis does blow over soon and not worry. Look how well this worked for my clients in the last 14 months. Do you remember the 18% sell-off in the Christmas massacre? Our strategy, which made no changes whatsoever, only had 2.6% drawdown. And then in 2019, our largest loss was 1.6%. That was the most volatility to pick up 23% gain. And that's because money is constantly bouncing between the stock market and the bond market. And when you get that through your head and adjust your portfolio, you're going to see you can generate healthy returns with almost no volatility. And again, this works so long as the federal funds rate is not yet at 0, because it means central banks can cut interest rates to push the economy hard, drive stock prices up, and protect the bond market. Number two, you should convert 100% of all equity holdings into the SPY ETF, even if it means owing taxes. Our goal will be to easily rotate between the SPY ETF and the UVXY ETF to be long or short U.S. stocks. And as you can see, we pulled 37% return in 2019 with one stock, the SPY ETF. It reduces business risk. It gives you exposure to the top 500 companies. It's the most liquid ETF/stock in the world, and it beats the pants off of any equity position you currently have. Very rarely do I want to short the stock market, but clearly, if you've studied history, there's periods of time where it's very lucrative and obvious. And if we're looking at tens of thousands, hundreds of thousands, millions of people being affected by the coronavirus, there will be a period of time where you want to bet down on the stock market. Number three, as long as China is shut down and their confirmed cases grow, buy the Yang ETF with up to 10% of your total portfolio. This shorts Chinese and emerging market equities, which are going to be punished from the virus and having shut down their cities for a prolonged period. Once this pandemic is contained, I'll give you the alert via this YouTube channel to flip the trade long with the EEM ETF. It could very well drop 30 to 50% before I go back long. Now, we've done okay in 2019 in this portfolio, but because of the extreme volatility China's stock market's likely to encounter, we can make a lot of profit in both directions in 2020. And I think this might be one of our best plays for the full year. Number 4, invest in large cap gold miners with the final 10% of your portfolio. Economy's slow. Central banks cut rates to increase spending. This saves stocks at the peril of U.S. government bonds. After rate cuts make money cheap and boost GDP, stocks are doing well, but government debt is not. Central banks do quantitative easing, QE, to save their government. QE is what is jet fuel for gold. If a crisis strikes, bonds go up first, then rate cuts, then stocks, then QE, and then gold to the moon. Astute investors all know this already, so front running in gold is already making the old barbellic relic spike. We've done well in this portfolio, anticipating all of this since December of 2018 for our clients. 39.9% return in 2019. 2020 should be even better, but 2021 through 23 is when I expect the mooning of gold. This 4 ETF portfolio is all you need to have an atomic bomb, coronavirus, B. Sanders, trade war, catastrophe-proof portfolio. 40% SPY, 40% TLT, 10% Yang, 10% GDX. That's my recommendation right now. But when you subscribe to my YouTube channel, I'll give you a free daily update showing you exactly what changes I'm making, as well as a daily profit loss on the complete portfolio. So if you do choose to follow this system, you'll see exactly how we're doing on a daily basis effortlessly. Now remember, I'm happy to also short any one of these markets. For the SPY, we have UVXY. For the TLT, we have TTT. For EEM, we have Yang, and for GDX, we have Dust. When the time comes to short any given market, you'll get it here first when you subscribe to this channel. Click the bell for automatic notifications. Every day I'll deliver you a 30-minute video with the most important charts, news, and a daily profit loss on all positions. Click the subscribe button below. Click the bell for notifications and watch my most recent video, which auto plays next. And again, look at how well this does. Low volatility, very little risk of complete loss because of your stock bond portfolio, plus exposure to Asia and to the gold market. These returns are very hard to beat, and you can do it for free on this YouTube channel. Cancel all subscriptions, fire all advisors, make your life simple, easy, safe. Don't be greedy. Follow a plan that works, that protects your capital, and that doesn't allow it to erode away by being in cash. Click the subscribe button below, then click the bell for notifications and watch my most recent video, which auto plays next.